Have you ever felt like you're just stuck? You know the trading basics. You've even had some wins, but your growth has totally flatlined. Well, today, we're going to dive into a method designed to shatter that ceiling and get you from amateur habits to professional consistency. So let's jump right in.
So why does this happen? It's because most traders get stuck in a loop, just repeating the same basic stuff over and over again. They learned about support and resistance, maybe a couple of candle patterns, and then that's it. Their learning just stops. They're missing a deeper, systematic strategy to really take them to the next level. And this right here, this visual says it all. The amateur's journey is this frustrating plateau where you have a good day, then a bad day, and you end up going nowhere. But the professional, they're on a path that allows for exponential growth. And the difference isn't some kind of magic secret. It's just structure. And that structure has a name: the Confluence method. I want you to think of it like a powerful triple filter system for every single trade you consider. It's all about instilling discipline and logic, forcing you to patiently wait for only the absolute best A-plus setups. This brings us to the core idea, what we call the kill zone. Confluence is that sweet spot where a bunch of different factors all line up perfectly, all screaming that this is a high probability trade. And with our triple filter, the rule is dead simple. If any one of the three filters says no, you don't take the trade. Period. End of story. So here they are, the three pillars of the entire system. First, we figure out the big picture trend. Second, we find a very specific area of value on our chart. And third, we patiently wait for a precise entry signal. You layer these three steps together, and that's how you create the kill zone. All right, so let's see how this actually works. How do we go from these concepts, this theory, and turn it into a practical, repeatable plan that you can actually use to find trades? Everything, and I mean everything, starts with pillar one, the macro trend. We're going to start on the daily chart because we want to see what the big institutions, the smart money, are doing. If they're clearly buying, then we are only looking for opportunities to buy. We never, ever fight the main current. Now pay attention because this is a huge distinction. Amateurs tend to draw these little razor-thin lines for support and resistance. Professionals, we don't do that. We think in terms of thick zones. These supply and demand zones are areas where tons of institutional orders are sitting. Price is way more likely to react inside a zone than at one specific little line. Okay, so we've got our macro trend. Now it's time for pillar two. We drop down to the 4-hour chart and we find our zones. And here's the hard part. We wait. We patiently wait for the price to pull back into one of our zones. We do not chase the price. Trading in the middle of the chart in what I call no man's land is just a recipe for disaster. And finally, pillar three. Once the price has entered our 4-hour value zone, we zoom in, way in, to the 15-minute chart. This is where we look for our green light, a specific candlestick pattern, like a big engulfing candle, that confirms buyers have officially stepped in and taken control right at that key level. This is the last piece of the puzzle we need. But hold on, there's one more layer on top of all of this, and it's absolutely critical. Timing. A setup that looks technically perfect at 2 in the morning is probably going to fail. You know why? Because there's no volume. We only hunt for these Confluence setups during high-volume sessions, like the London and New York overlaps, when the big boys are actually playing. Look, having a great strategy is only half the battle. Seriously, without ironclad rules for your discipline and your risk, even the world's best system is going to fail. This is what really separates the pros from everyone else. This little table reveals the true secret of professional trading. You do not need to win all the time. Check this out. A trader who only wins 40% of the time but makes 3 times their risk on every win is going to be wildly profitable. Meanwhile, someone who wins 70% of the time but only makes a 1-to-1 return will barely break even. See, it's not about being right. It's about how much you make when you're right. And this brings us to the single most important rule in trading: 1%. You never, ever risk more than 1% of your capital on any single trade idea. If you risk more, you're not a trader. You're a gambler. At 1%, you are a business owner protecting your capital. We also have to completely reframe how we think about a stop loss. Getting stopped out is not a personal failure. It's a calculated business expense. It's your planned exit for a trade idea that just didn't work out. It's what keeps you in the game to trade another day. Okay, so that all sounds good, but where do you actually put the stop loss on the chart? It can't just be some random number of pips, and it definitely can't be based on how much money you feel like losing. The answer is actually really simple and logical. You place your stop loss at the invalidation point. That is the exact price level where the original story you told yourself, your reason for taking the trade, is officially proven wrong. If price hits that level, your thesis was wrong. Time to get out. No questions asked. And even with a perfect system, these 4 psychological traps will absolutely destroy your account. Overtrading just because you're bored, chasing a move because of FOMO, moving your stop loss further away when a trade goes against you, and completely ignoring major news events. These are the 4 horsemen of account destruction. Avoid them at all costs.
So to make this all super practical and to stop those emotional mistakes before they happen, we need a simple mechanical checklist. This is what you're going to use before every single trade to make sure it meets the strict criteria we've talked about.
This is your final gatekeeper. Before you even think about clicking that buy or sell button, you have to be able to answer yes to all 5 of these questions. Is the daily trend confirmed? Yes. Is price in my 4-hour zone? Yes. Do I have my 15-minute trigger? Yes. Is my risk set to 1%? Yes. And have I checked for any crazy news events? Yes. If even one of those is a no, you do nothing. You just walk away.
In the end, it all comes down to this single question. A system like Confluence, built on rules, patience, and professional risk management, that's how you build a trading business. Anything else? Well, it's just gambling. The choice is yours.